But I want to say, the thing that has obsessed me, and it's another thing which motivated those tweets and my kind of the reappearance of my public persona, was these very, very rare events when volatility goes up with stock prices. And as far as I believe, or I can say, it's only happened in Weimar and like those, like the kind of really weird stock market places like Venezuela and
Although it
Argentina.
did happen in 99, right?
I don't know if it. I know for sure it happened in Japan.
I remember trading 100 vol equities in 99 in the blow-off, and it was extraordinary. So that's the only other time I've seen it.
So tell me more, because that, I don't recognize that data point. So you're saying 1999. You're saying in the midst of the tech bubble, as we were just approaching the final surge, you had vol going up.
Yeah, and we saw those some of the tech names trading 100 vol, which was extraordinary at the time because it was in a bear market.
Yeah, but you're right, because the 1998 to the finale was punctured with 50-60% peak to trough corrections in those positions, which gave them. But what I want to say is that they were rising with a high level of volatility. Okay, and so when they had that if you will, that normalized volatility was an average of the vol went to 120 when they halved, and then it reverted when they went back up. And what I want to say to you that is that actual surges in stock prices higher, because I spent a lot of money researching this, and maybe other people watching this could come back and lend any of their observations if they can. But I am pretty sure that the only time since 1987, the crash of 87, the only time, maybe it's the only time in terms of a stock index, that the stock index went higher and vol surged higher at the same time, was with the when what's he called, the Japanese Prime Minister, Abe-san, because he'd been Prime Minister a long time ago and was discredited being too nationalistic with the whole Second World War and stuff. And then he got reinvented and he came back with his 3 arrows, if you remember.
Yeah.
And the Nikkei and topics just went boom, right? And vol went boom at the same time. Now, there were some special factors, because Japan, being first into zero interest rates, had been the first financial society to weaponize vol into a fixed income security. Yeah. And so those obaidashi, I want to say, instruments got caught by, everything went wrong at the same time. But even over and above that, there was this remarkable moment. And we'd been looking at a trade, and we then put the trade on in 2013, just saying, well, okay, so it's happened. And it's not, I was going to say the unthinkable. There's no rule of nature that says vol can't go up with stock prices surging higher. It's just that it's really never happened. The only point being that Japanese experience. And so the genie's out of the bottle. And we sat with this. It was the most insane. I'm going to try and flesh out the position we had and try and put it on Twitter, maybe today or tomorrow. But if we had, so you kind of, the skew puts are always way out of the money. Puts are always 2 times more expensive than calls on the indices. But you kind of, and why? Well, why? Just because of the observational data that kind of equity vol surges when prices fall, so the puts are more expensive. If that world changes, then you can sell those out of the money puts. You can buy so much calls, but then of course you had to structure it whereby you couldn't be naked to being wrong. So hence the complexity. And then there was it required a lot of carry. And so we had to engineer and we had to trade to create the carry. But if stock prices had moved 20% quickly, we had, I mean, gold is fantastic, but this position, rock and roll. And this is the position that really Chris Cole, from Artemis, the volatility trading kind of platform, that he had written up. That, if you want, like, my favorite ever independent thought piece on the stock market was Volatility at World's End by Chris Cole. And that's what I wasted a year trading that early, because of course Japan was in the midst of the vol regime of 2008 to last year, and of course vol just went down, and so that trade was a negative carry trade that just did nothing. What if in this world, like you say, we like with the deflation that's coming, and therefore what the policy action is, does that mean that volatility is just continues to just be subdued, or does this mean that we move into the new world, with the new post-virus world, is a world where just possibly volatility may lose the prejudice of people's expectations?
And does that mean that you're suggesting that in this environment there could be a surprise in the fact that the equity market goes higher and not lower?
Well,
because in the end you're owning an asset that maybe has some value perceived against the debasement of the fiat currency, for example.